tonight. The right time to see Kudlow & Company is 8 p.m. Eastern.
All right, everyone, let's strike a big blow for capitalism.
Special time, same direction.
We aim to be right on the money, right on business, and right on America.
Kudlow & Company, tonight, 8 p.m. Eastern on Cnbc.
Welcome back. We're looking at a market that is strong once again today as we approach the end of the quarter, and the earnings season will begin in earnest in the next couple of weeks or so. We want to take a look at global IPOs. Here we are at the New York Stock Exchange, and there has been a lot of talk about business going overseas. Certainly Hong Kong has seen a number of increasing business and increasing IPOs. So has London. Take a look at the market position for the major exchanges in the United States for global IPOs. The number of issues at New York, 40 issues valued at 16.9. The market holding on to gains today as we approach that final stretch. Dow Industrial's up 20 points. In the NASDAQ, it's up about 4. 2006 is shaping up to be another strong year for Wall Street securities firms, but next year, maybe a different story. We've got those details. Speaking of strong years, large caps generating lots of buzz in 2006. In light of that, we'll take a look at which blue chip names have been the biggest and most consistent Dow drivers in recent years. Stay with us. Hi, everybody. Welcome back to the closing bell. We've got about 30 minutes before the close on Wall Street, and we're in that final stretch. We've got a market that looks good, feeling good, a lot of energy down here. The Dow Jones Industrial Average approaching its all-time high, and we are watching it. And, of course, we did have the GDP report out today. 2.6% annualized growth is what we saw. Let's take a look at where we stand with the Dow Jones Industrial Average right now, up about 23 points or so. Just a couple points away, 11,712 last trade there. NASDAQ Composite also higher, just a fraction, about 3.5 points higher there. And the S&P 500 also showing a gain. Back with Bob on the floor here, talking about what's going on. I don't know, are a lot of people here, you think, caring about whether or not if we reach that all-time high, Bob?
I care. Please, dear God, let it happen today so we don't have to do this again tomorrow. I care. Yeah, I do think people care. I'll tell you why. They care because everybody here recognizes that it'll get the public talking about the stock market and about the economy. It's good for investor confidence. That's why I care about it personally. Other than that, most everybody else is passing around notes about what matters the most for the fourth quarter. And the number one issue on everybody's list is this whole interest rate scenario. You know, you see rates come down in the last month and a half. That's been great news. It's one of the reasons the stock market's been moving up so
Bob,
much.
Come on. You really think rates are going to come back down in December of this year that soon after 17 rate hikes? I mean, maybe I could see 07, but I mean the last month of the year?
It's happened in the last 6 weeks, though, and most people didn't think it would happen this soon. It's been moving in the right direction. Look at 30-year mortgage rates went from 6.8 to 6.4% in the last month. That's terrific news overall. If this can keep up, you'll have tremendous help to earnings, and it will have tremendous help to the U.S. consumer. And maybe, Maria, it'll even help clean up this real estate mess, make it a little bit easier to refinance those mortgages and get rid of that inventory overhang we're hearing about. All right, I'm being optimistic, but that's the key point. The only other thing I would mention is the global economy right now. The big question is whether or not we've kind of peaked on the global economic side. You know, we had this big global expansion all over the world, thanks to China and the U.S. consumer. Thank you very much to both of them. Now the question is, have we topped out? And every time I call around and ask, have we topped out? It depends on what the U.S. consumer is doing, because the U.S. consumer determines where the global economy is going to be going. So can we keep the consumer spending at this point? That will determine whether the global economy keeps going. So those are going to be the two big issues in the fourth quarter. The oil thing is all over the map. Half the people think it's going to go up again, that we're all wrong. This 20% drop is wrong. The other half think that the inventory levels are going to keep the thing on the low side. So there's no agreement on oil at all right now.
You have to believe, though, that the fact that oil has come off of, we were at $78 or so, close to $80 a barrel on crude, all the way down to $62. You have to believe that's going to be a positive going into the fourth quarter and the consumer spending that you're talking about.
It's absolutely a positive. Look what's happened, though, in the last day. Oil just moved down here in the middle of the day. That's certainly a very good sign. If this could prove to be a one-day blip, that move we had yesterday in oil, 3%, that was the biggest move since March. And we can keep it down around here, all that's going to be a positive. Now you're going to have the low interest rates, the oil continuing to decline. If you can keep consumer spending up, it's still going to look good in the fourth quarter.
Later, I want to talk about this list. I want to get your thoughts on this list. The top performers of 2006.
That's
GM,
a long
Merck,
list.
AT&T. I'm loving this list. I'll talk to you later, Bob. Thanks so much. Let's get to Sharon Epperson. She's watching oil here at the NYMEX. Sharon.
Well, you all were talking about the wild ride that we've seen in oil over the last couple of days. It was a wild ride today.
NASDAQ's up about 4 points. We're going to take you home, really take you to the closing countdown coming up. Then cashing in on so-called bank conversions. Up next, find out how you can do it and what it all means for your investments. After the bell, stay with us. We've got a lot going on, a hot show, major problems, and yet another hedge fund to tell you about. Details on that in the next hour of the closing bell. Then tonight on The Big Idea with Donnie Deutsch. Got to tune in there. The always outspoken Mark Cuban is Donnie's guest. Donnie talks to the maverick businessman about his growing empire. That's tonight, 10 o'clock Eastern, only on CNBC.
You're watching Closing Bell on CNBC. First in business worldwide.
Interesting to see how many things changed over the last 6 years when the Dow was at the high last time. Meanwhile, business on Wall Street is still strong, but the outlook for next year is less optimistic. That's according to the latest research from the Securities Industry Association. In the first half of the year, domestic...
Just to get more scale in a particular market, a lot of them have very nice branch franchises and nice deposit structures that can be nice fill-ins for larger institutions.
We were just looking at a graphic of the banks that are looking at their 3-year anniversary since converting, doing the conversion. What's so special about 3 years? Why would you expect that perhaps now might be the time?
Well, from a regulatory perspective, these conversions have to wait 3 years according to the regulatory guidelines. So in the last 3 years, they may have done a lot of buybacks of stock, they may have raised their cash dividend and put their capital to work, but ultimately they can't be acquired until that 3-year mark.
Well, we are above the all-time high in the Dow Jones Industrial Average, with the Dow sitting at 11,000 now 726. That is above its all-time high. Cassandra, give me your sense of what happens in the financial services sector when you do see a bull market resuming. Does that encourage deals, or do you think, is that looked at as expensive?
No, it encourages deals because the valuations on these stocks are higher. They have stronger currency with which to do deals. At the same time, as I said, the yield curve environment hasn't really gotten any better for the smaller banks, so it gives them the opportunity to maybe get out while the getting is good.
And what are the premiums right now in the market? When you look at this group, what would be an appropriate book value for some of these banks to go at?
Yeah, it would be anywhere between really 1.5 to 2.5 times book value for this particular subsector of the banking sector.
Do you see any geographies more poised? Look at this market where, while we were talking with Cassandra, the Dow Jones Industrial Average did exceed its all-time high, and we are looking at the Dow right now just about at that level at 11,722. As far as the stocks doing well and really leading this rally today, you've got the financial services certainly doing well. Stocks like JP Morgan up about 1%. That's one stock that is certainly contributing. And technology also doing well. Hewlett-Packard, for example, as those congressional hearings go on, that stock is up 1.5%. That is one of the big winners within the Dow today. And GM is a big contributor to this rally here. 11,723 is the industrial average. GM is up 2.25% right now. That is definitely one of the big drivers here. By the way, healthcare is not participating. Merck is down. You've got others such as Pfizer also weaker. I should point out that J&J is a Dow component, and it is actually higher. Oil stocks also mixed on the session. ExxonMobil and BP are not among the stocks leading this rally. Chevron is higher, but that's not a Dow component. Exxon is. So we are going to be talking about what is moving this market next. And then which companies have been leaders and laggards in the market rally year to date. CNBC's Mary Thompson working that story. Mary?
Well, Maria, as the Dow approaches a new high, it is old school stocks leading the way. I'll have that story coming up.
And then after the bell, Bugattis. Veyron goes 0 to 60 in 2.5 seconds. How about that? Consumers are paying up for that power. We'll take you behind the scenes of the world's fastest and most expensive car in the second hour of the closing bell. Then today on a 5 p.m. edition of Fast Money, fast questions for Sir Richard Branson. From his $3 billion investment in cleaner burning fuels to what's next in the airline business. All from the man who sets the trend, Sir Richard Branson, on Fast Money with Dylan Radigan tonight, 5 p.m. Eastern on CNBC. Welcome back. We are looking at the record books on Wall Street today. We have been watching this market trade higher from the earlier in the morning, and just a few moments ago, the Dow had exceeded its all-time high. The strength in the market comes from two groups, really: technology along with financial services. You've got stocks like J.P. Morgan higher. McDonald's, by the way, also has been one of the leaders in this market over the last 5 years. Today, that's actually one of the laggards in the market. The strength in this market has to do with Merck, has to do with GM. Has to do with Hewlett-Packard, among others. That is just today alone. As we approach the close of trading now, we turn our attention to some of those biggest Dow winners and losers since the closing high back on January 14th of 2000. CNBC's Mary Thompson has more on the blue chip leaders and laggards. Mary.
Well, Maria, 6 years ago, it was dot-coms, not Dow stocks, that were catching investors' fancy. But since that time, old-school companies have paced the Dow gains. The best informers include Altria, formerly Philip Morris. It's up over 200%, helped by a number of legal victories scored by Big Tobacco. Caterpillar is up 156%. United Technologies up 99%, both benefiting from growing global demand for their products. And while Boeing's recovery has been choppier since 2003, it has been on the rise thanks to strength in its commercial aircraft unit. Lastly, ExxonMobil's gains tied to the tremendous rally we've seen over the past couple of years in crude oil. As so often happens, as rally fades, the leaders become the laggards, and 2000 was no different. Many former leaders have yet to make a full recovery. In 1999, two tech bellwethers, Intel and Microsoft, were added to the Dow 30, along with Home Depot and SBC Communications, which later acquired former parent AT&T. Three of those new additions, Intel, Microsoft, and Home Depot, are among the 5 worst Dow performers since the last record, in part because the large-cap growth stocks like these fell out of favor with investors. GM's decline is tied to market share loss as well as its own financial woes, and Merck's been battered by legal woes connected to its painkiller Vioxx and the loss of patent protection for some top-selling drugs like its cholesterol treatment, Zocor. Now, these aren't the only losers among the Dow. Actually, 20 of the 30 components are still down from their levels on January 14th of 2000. But a number of strategists who've been guests on CNBC over the last couple of days suggest that may change. Almost all expect large-cap stocks to outperform small and mid-cap issues looking ahead, and more than a few say they are favoring technology and drug stocks right now. Maria, back to you.
All right, Mary, thanks so much. And we've got just about 6 minutes before the close on Wall Street, where we'll be back with the closing countdown. Stay with us, because after the bell, BlackBerry maker Research in Motion, releasing its second quarter earnings, will have the results, instant analysis of the quarter. That's in the next hour of the closing bell.
Closing Countdown is sponsored in part by TD Ameritrade.
Hi, everybody. Welcome back to the closing bell here on the floor of the New York Stock Exchange. Chatting with Bob Pisani about this market as we approach the close.
Torture is what it is. We're 2 points away now. 11,720 essentially on the Dow. 11,722 is what we need. It's going to torture us right to the end, folks. But look, good performance despite the fact we may not make it at this point. We had a weaker than expected GDP revision this morning.
Right.
There's a little bit of concern. Maybe the fourth quarter GDP numbers and third quarter may not be quite as strong, but not dramatically so. That's the big debate, and we're very quickly going to get out of this debate, and we're going to be talking about what's happening in the fourth quarter very quickly.
What do you think of volume today, Bob? How was it from your standpoint?
I don't know, 1.4 billion shares. I don't consider that very good. Now, we ran out of energy a little bit here. We didn't have the volume yesterday. We didn't have the advanced decline numbers that we saw yesterday. We didn't have the kind of bids we saw yesterday.
What was like 1.7 billion shares or something yesterday, right?
That's right. And so the energy level was not quite there today, but you still got a little advance. It's interesting. We got just a 2-point jump in the S&P futures 15 minutes ago, and that's what put us right close to this record in the Dow Jones Industrial Average. I think this is a good performance still nonetheless. Another day where we had a little bit of disappointing economic numbers and still the market continued to advance. The momentum continues to be in the market overall. I wish we could see the interest rate scenario turn around a little bit here. This is now, I believe, the third day that interest rates have moved up again. I don't particularly like seeing that. If you're a bull, you're not going to be happy, but oil at least dropped down again.
I got to tell you, I like this leadership, Bob. I don't know about you, but when you think about the fact that we've got financial services, you've got technology, even, well, not today necessarily, the healthcare group, that wasn't really the participants of today's rally. But look at this, look at these crowds on some of these posts. There is, you may not be seeing it in the numbers, but there is energy down here, and the leadership is good.
Yeah, the leadership for the quarter, and while healthcare didn't do very well today, healthcare did very well on the quarter. Technology did very well on the quarter. It had a tough time for certain parts of it in the beginning, but they came back overall and did pretty well. It's interesting that energy has been the big laggard on the quarter. That was the big market gainer, and yet in the last 3 days we've seen a nice little rally in those energy stocks. That's certainly very important, and I think very humbling, because a lot of people got out of energy. That was supposed to be over, that whole play, and now all of a sudden it's come back again. I think that'll mitigate a little bit if oil continues to stay put where it is around this $62 range.
I know you agree with me, Bob. In the next couple of weeks, it's all about earnings. That's going to dictate whether or not this momentum continues. 14% growth is what they're looking for S&P 500 profits.
And double-digit again now for, what, 12 quarters in a row at this point. That's certainly going to be very important, Marie. And, of course, we'll be looking at a lot of other things of, like, interest rate scenario and the whole oil situation overall. There's the closing bell. Executives from CBRE Realty Finance ringing that closing bell. And that's it. Closing bell is next with Maria Bartiromo.
Excuse me.
And breaking news, welcome back to the closing bell. There you had the gavel come down. The Dow Industrials teases and tantalizes us all day, briefly breaking above the record closing high on Wall Street and falling today just shy of it. The industrial average ending with some gains for sure, but not at that magic level of 11,722, which was the highest level on record. Once again, we got the second highest level ever on record today. That's certainly a positive, and the best level for 2006. Also, the market, certainly one of the big stories. Let's take a look at where we're ending today's trading session with the Dow Jones Industrial Average at 11,712, and the NASDAQ Composite and the S&P 500 holding on to gains. The NASDAQ today up about 6.5 points. The S&P 500, similar chart pattern on the Standard & Poor's, finishing with a gain of about 2.25 points. Other big stories we've been covering today, and we have breaking news on a handful of them. Former Hewlett-Packard chairman Patty Dunn today blaming CEO Mark Hurd for the company's spying scandal. Hurd is scheduled to testify this afternoon. We're going to bring his testimony to you live. Bob Pisani back with me on the floor of the New York Stock Exchange. Interesting to note, Bob, as this spying scandal goes on and the congressional hearings goes on, Hewlett-Packard, one of the best performers on the Dow.
Up 12%, in fact, for this particular quarter, and very close to a 52-week high just a very short while ago, Maria. And you're right, that's certainly an important trend that we've seen. We'll see if that continues. Look, we didn't make the new high in the Dow Jones Industrial Average, but pay attention to the larger picture at this point. Great performance again today. We had weakness in early on the GDP. Revisions earlier on were weaker than expected, but still managed to move up. Very quickly, we're going to get out of this whole scenario in the third quarter, and we're going to move on to the fourth quarter. Here's what matters in the fourth quarter and what they're talking about down here. We're going to finally resolve this question. Is it going to be a hard landing or a soft landing? And I said, well, what's going to resolve the issues? 4 points came out of time and time again from traders. Number one issue was interest rates. Keeping them low or in the right direction, moving down, is going to help the soft landing. Oil moving down, helping the soft landing. Housing is a big if. Some people were very much in favor of the idea that this was going to be resolved with low interest rates. Others say housing is going to be a disaster and lead the economy into a recession. And finally, a surprising number mentioned China and whether or not that country's economy would slow down. Let's catch our breath and look at the Dow winners for the third quarter. We got one more day, but take a look, and you'll see the Dow represented the winners overall in terms of sectors. Drug stocks like Pfizer's, consumer stocks like McDonald's, tech stocks like Microsoft. When was the last time Microsoft was up 17%? AT&T and the telecom group did great. Bank stocks also did very, very well here. Finally, let me show you the laggards here. All of them in the cyclical group, like metals, machinery, diversified industrial stocks like 3M and United Technologies to the downside. Let's go over to Rick Santelli over in Chicago. And Rick, they were talking interest rates down here all day and whether that decline in the 10-year yield would continue into the fourth quarter.
Well, Bob, I'll tell you, all the interest rate boys want me to tell you they're flattered they're on the top of your list, but I'll tell you, it's going to be a tricky one because all of a sudden, as you pointed out, what's bad data is bad for stocks, good data is good for stocks, but if you're looking at interest rates, remember, good data, especially now as they try to differentiate soft or hard landing, probably could continue to push rates higher, so it's going to get a little dicey. To that end, look at a one-month chart of 5-year note rates and keep in mind, today's 5-year auction was terrific. Last month's 5-year auction was one of the best in 10 years. But as the chart shows, we're about 8 basis points above the best close, which was 4.5. You could see it clearly. Rates are reversing a bit the last couple days. But more importantly, from an intraday level, we're close to 10 basis points higher. Will it continue? We'll see. 2-month chart of the dollar index, top of the range, but it's still a range. Maria, back to you.
All right, Rick, thanks so much. Rick Santelli there. Turning back to equities, the Dow's record run